You've been watching crypto bounce back and forth for months now. Maybe you missed the Bitcoin run-up, or maybe you rode it and got burned. Either way, you're eyeing Coinbase stock thinking it's the safer play on crypto, less volatile than holding coins directly, right? Here's the thing, that logic isn't wrong, but it's catastrophically incomplete when you look at what's actually happening to coin right now. I'm a Nexus AI analyst, and I've spent years tracking what actually moves these fintech and crypto plays, not the hype, but the real fundamentals and technical signals that matter. Right now, Coinbase is sitting at $145 after dropping over 11% in just the past month, and our AI signal is flashing bearish with high confidence. But here's what caught my attention, this isn't just another crypto dip. The stock hit $402 in its 52-week high, which means we're looking at a company that's lost nearly 2/3 of its peak value. The question isn't whether it's cheap, it's whether cheap means opportunity or value trap. Let's start with why someone might want to own this stock, because the bull case isn't trivial. Coinbase is essentially the Goldman Sachs of crypto, they're the most regulated, most institutional-friendly exchange in the space. When crypto goes mainstream, they're positioned to capture that flow. And here's the kicker, Cathie Wood, through her ARK funds, has been a consistent holder of coin stock. Now, you can debate Wood's track record, but she's not buying this as a momentum play, she's betting on the long-term infrastructure of digital assets. The revenue model is powerful too, they make money on every trade, and when crypto volumes spike, their profits can explode overnight. But that's also where things get complicated. Here's where my analyst brain starts getting concerned, and it's not just the 11% weekly drop we just saw. The RSI is sitting at 40.5, which shows we're in oversold territory but not extreme oversold, meaning there could be more downside. The MACD is negative and confirming this downtrend isn't just a temporary blip. Our AI models are pointing to a target of $135, which suggests another 7% downside from current levels. What worries me most is the sustained selling pressure. This isn't panic selling that bounces back quickly, it's methodical distribution. And crypto market volatility is directly pressuring their trading volumes, which hits their fee income immediately. But the real risk goes deeper than technicals. Here's the paradox that makes Coinbase tricky, their business model is both their greatest strength and their fatal flaw. When crypto is hot, they print money, their Q1 results in the big crypto run were absolutely massive. But when crypto goes quiet, their revenue can fall off a cliff because 80 to 90% of their income comes from transaction fees. It's like owning a ski resort in a world where you can't predict if winter will come this year. Compare that to a traditional exchange like CME Group, which has diversified revenue streams and more predictable volumes. Coinbase is essentially a leveraged bet on crypto activity, not just crypto prices. And right now, that activity is declining even as some crypto prices hold up reasonably well. The question becomes, is this a temporary lull or structural shift? So here's my honest read on the situation right now. If you believe crypto is in a long-term bull market and that institutional adoption will continue accelerating over the next 3 to 5 years, then Coinbase at these levels could be compelling. The technical damage suggests we might see that $135 target hit first, which could be a better entry point. But if you're looking for a stable, predictable business that pays dividends and grows steadily, this isn't it, this is a high beta play on an emerging and volatile asset class. The smart money approach I'm seeing is to wait for either a clear technical reversal or a drop to more compelling valuation levels. Cathie Wood's position tells us institutional believers aren't abandoning the story, but they're also not aggressively adding right now. That patience might be the key lesson here. What I'm watching for next are the specific catalysts that could flip this script. First, any major regulatory clarity in the US around crypto, positive or negative, will move this stock 20% in either direction overnight. Second, their Q4 earnings report will show us if they've successfully diversified revenue streams or if they're still completely dependent on trading fees. Third, Bitcoin and Ethereum price action, because despite what anyone tells you, coin trades with crypto correlation in the short term. A sustained crypto rally above key resistance levels could trigger the technical reversal that brings buyers back. But here's the thing I keep coming back to: even if all of those catalysts hit positively, you're still buying a cyclical business at the mercy of forces largely outside their control. The risk-reward calculation depends entirely on your time horizon and risk tolerance. Look, here's my bottom line on Coinbase: it's not a clear buy or sell right now, it's a bet on the future of crypto infrastructure with real business model risks attached. The technical picture suggests more downside is possible, but the long-term thesis isn't broken if you believe in crypto adoption. This is educational analysis, not financial advice. I can't tell you what to do with your money. But I can tell you to get the full dataset, all our AI signals, and the complete technical analysis at nexusaicalls.com. Do your own research, understand your risk tolerance, and never invest more than you can afford to lose in volatile plays like this.